What is your view now on the macro markets? It has been a heck of a start to 2019.
Well, our short-term model flashed a sell signal on October 2nd. We wrote about it. That same model flashed a buy signal at the end of December, and we said the S&P is going to trade out to new all-time highs, which has happened. And now that you fell back from that new all-time high, people are saying it's a false breakout. We don't think so. We think we're involved in a melt-up. Ever since actually October of '08, which is when the majority of stocks bottomed, we have said, you know, we're in a secular bull market. Secular bull markets run 15 plus years. This thing ought to have another 6, 7, 8 years left in it, and nobody believes it.
Do you believe it?
I believe it, and I'm invested that way, and I'm having a really good time.
Yeah, I mean, a lot of people have had a good time, but I think the problem is, it's like the later the party goes, Jeff, everyone's like, oh, sooner or later somebody's got to leave the party. And once one person leaves, a lot of people tend to leave at the same time. And I wonder, are people going to start leaving the equity market, or will the fact that we've had such a big run create that melt up that Larry Fink of BlackRock said could happen on CNBC a couple weeks ago?
Yeah, I think that's right. Now, I'm out doing seminars and presentations for hundreds of retail investors. And the retail investor or individual investor is not just cautious, they're scared to death. And that is not the way secular bull markets end. The 1949 to 1966 bull market ended with a rush to the upside in '66. The 1982 to 2000 secular bull market ended with a tech rush to the upside in the late '90s and early 2000. We are nowhere near that. We have none of the speculative juices flowing in the individual investor. So I think this thing's got years left in it.
Years left in it. Years?
Yes, years.
Wow. Let's talk about one part of the market that you particularly like, because all these technical signs are pointing that the small caps, the Russell 2000, is looking very strong.
Yeah, I mean, my friend Amy Zhang at Alger Capital was up like 40+% last year in a market that was pretty difficult for small caps. And she runs the Alger Small Cap Fund, and she's doing very well this year. I think the time for small caps has come, and I think they're going to do very well going forward.
It's a great mention because, Jeff, last year in the fall, we actually had a special series on this show of the top fund managers, and she was our #1 performer in that time. So she's well known to our audience as well. You know, small caps, like the rest of the market in December, they really took a fall. But you probably think that was just one of these one-off situations, and that fundamentally they are still strong.
Yeah, I think with the stronger dollar, I think it favors them. I think that with no international or small international exposure, I think it favors the small cap complex. So I'm very bullish on the small caps and mid caps.
Is this a Fed-driven market, Jeff? That's the nut. You know what I mean? The bears are all like, well, nothing matters because it's just the Fed juicing everything.
I think it's an earnings-driven market. People have been telling me, you know, earnings are going to come down. I don't believe it. Earnings continue to come in better than people expect. I think that's going to be the watchword going forward.
Yeah, and if the Fed stays on hold this year, that goes into your belief that equities can indeed remain strong, not just this year, but as you said, for years to come. But what if they make a mistake? What if Powell and company screw it up?
I don't think that's going to happen. I think that we're actually in a sweet spot in the economy. I don't think we're in late cycle. I think the downturn was so severe and the recovery so muted up until the past couple of years that we've elongated the mid-cycle, and we're nowhere near transitioning into late cycle. If we were in late cycle, why are the late cycle stocks acting so poorly?